Hello, Ryan Roby here, mortgage broker from Home Loan Village, and today I want to talk to you about borrowing money to buy, not a Lego car, but that's a nice little prop, just a car. This one's made by my son Zach and probably not worthy of finance, so we'll put that aside for now. I want to compare the difference between getting a car loan, paying that off, and releasing cash within equity of your home. So that can be refinancing your home for a larger amount and using the spare money to buy a car, or topping up your existing loan, same thing, to use the money to buy a car. So here's some differences between the calculations and how things can work with interest and additional repayments that you might want to consider. So first off here, we've got a replication of a car loan. So it's a $50,000 amount up the top here on a 5-year loan term with an interest rate of 7%. Your monthly repayment there is going to be $990. And at the end of the 5 years, you will have paid back roughly $60,000. So your $50,000 car in this scenario costs you 60 grand. If we compare that to borrowing the money within a home loan, typically we're going to have a 30-year loan term. We're going to have a lower interest rate, so that's a positive. We're going to be roughly 6% instead of 7%. So your monthly repayment is going to be $300 over a 30-year term. And because it's a 30-year term, you're paying a huge amount of interest. So all of a sudden, your $50,000 car is $110,000 nearly. Obviously, we don't like that. So what can we do about that? Well, remembering that the car loan repayments were $990, let's see if we can get a repayment amount that's lower than that gives us the same outcome. So obviously I've cheated, and I can tell you now that if we put in $500 as an extra repayment each month, we get roughly the same number here once we've paid out the loan. So it's going to cost us 60 grand all up. So what we've got here is a lower interest rate, a combined monthly repayment through the minimum and the additional of $800 instead of $990. So it's $190 a month cheaper than the 5-year car loan. The other thing to consider here is if you run into a spot of bother and you need to, you can knock off that $500 additional repayment, and revert back to just paying that $300 a month if you need to, just to get you going for a while. Maybe you've got a tough month or something like that. But there's some figures to differentiate there and that are interesting to look at. If you want to dive in a little bit deeper, I'd love to have a chat with you. Please reach out, click on the link below. Thanks, guys.